Oil prices are ticking up today. That's as Israel struck Rafah on Gaza's southern edge from the air and ground and ordered residents to leave parts of the city. Rafah has served as a refuge for more than 1 million displaced Palestinians. Now, Brent crude is up 0.55% to $83.8 a barrel, and WTI is trading at $79 a barrel, while negotiations for a ceasefire with Hamas continue without resolution. Asia markets are mixed, but European markets are set to open higher. Oil prices reversed declines of last week. That was the steepest weekly loss in 3 months, and now are focusing on weak US jobs data and a potentially imminent Federal Reserve rate cut. Riyadh's move to raise the official selling prices for its crude sold to Asia, Northwest Europe and the Mediterranean in June is also supporting those oil prices. And now let's get more on this with Jamil Ahmed. He is an online trading brokerage at GTC Group, his chief analyst, and he joins us now from Dubai. Great to be with you this morning, Jamil. So is this signaling expectations of strong demand this summer? We've said that Saudi Arabia has hiked its price for its crude in June. Why did they do that, and what is the signaling?
Well, Ludovica, there's a lot of optimism right now about oil prices when we look at the longer term implications of some of the global factors you highlighted in the introduction. Namely, so much hype about low interest rate expectations from many of our advanced major economies. Of course, investors are very much enjoying the beat to the drum from the US Federal Reserve, specifically after the monthly jobs report, which had somewhat of a miss. And that revived hopes that the Federal Reserve, the US Central Bank, can be in line to cut interest rates potentially as early as September. But even before then, we're likely to have the European Central Bank pull the trigger in June, and we should hear from the Bank of England later this week as to whether they can pull the trigger or at least join that party late into 2024. And when you've got economic data, I'm not saying everything's all roses and sunshine, but it's certainly much stronger footing than this time last year and what was a very challenging 2023. And I think that is also helping the demand for oil. And we can't forget here as well that China economic data is very much moving underneath the radar, but it is picking up a lot of steam. And that is the major consumer of oil by oil accounts as well, which is likely implicated why we've seen some of the most recent news towards price targets and some of the moves from Saudi Arabia also.
Right, but Jamil, having said all that, how do you expect oil prices to react from now on? Because some analysts have said, and they are still saying, that WTI and Brent could reach the $100 a barrel mark in the next few months amid geopolitical conflicts. But I think it's really fair to say that until now, reaction has been somewhat muted in those energy markets.
I would say somewhat underwhelming and as well as muted. If you look at, if that fact of the geopolitical conflict is what's supposedly going to hypothetically drive oil prices back above $100, I think that's more of a headline, because if you look at the very disturbing yet ongoing situation that has taken place, oil prices have actually lost significantly since those events took place in October. We were somewhere around $94 back then. We moved down as much as $30. And again, if you look at that very unprecedented yet direct escalation between Iran and Israel that took place last month, actually since then, the oil price has lost a further $10. So yes, we did hit a 6-month peak about $85 after those unprecedented events between Iran and Israel. But since then, we've lost $10 because in fact, there's not seen as being a more direct intervention as what has already taken place, and that somewhat that was tit for tat. But of course, you never say never when it comes to these very uncertain events. Right. And I would look towards whether there's going to be a ceasefire and whether that has implications on financial markets and the oil prices. At the same point, oil prices could also range because at the moment, investors don't really know how to play their cards when it comes to geopolitical events. It's quite simply and quite frankly, nobody can predict or say what's next.